Welcome to another stage analysis video. It's Wednesday the 13th of December 2023. We can do a midweek update following today's Fed meeting. I'm going to go through the major US indexes before having a look at some of the short-term breadth measures and go through some of the watch list stocks that I posted yesterday in a little bit more detail. So starting off with the S&P 500 here, you can see today's move obviously very strong into the end of the day following the Fed rate decision there. We've got up 1.37%, but as you might have noticed, we're starting to blow out of the normal range. So we're above what's known as the +3 ATR level here. So we have these counterbands on here with 3 ATR levels on, so the 1, the 2 and the 3. So once you get above the 3 ATR level, as you can see from previous periods, you tend to be a little bit short-term extended. Doesn't necessarily mean that you've reached a top immediately. Can sometimes run for a while at the upper band, but generally once you get to this level after you've already had a run, you can see we already hit the 3 ATR level earlier in the last couple of months here, and then had a consolidation and then have run out again. So a little bit extended in the short term here. You can see from the percentage of stocks above their 20-day moving average as well, we're at 91.4%, which is, I believe, the highest level of the year in the S&P 500 here. So other periods where it's got to similar levels at around the breakout level back here, close at the 3 ATR push back in June, and the short-term peak in the early July there. So other times, and obviously more recently before it broke out at the start of December there. So at the moment, extended into the short term with 91.4% of stocks above their 20-day moving average. If we look at the equal weight chart with the 200-day percentage of stocks above their 200-day moving average at the bottom here, we're at 74.8% at the moment with that. And again, we've pushed out above the 3 ATR level today, which did a little bit earlier in the month before consolidating and then pushing through again. So approaching the highs, not making new highs like we are in the S&P 500 normal index, but it has had actually a stronger move since the October low. So I think this is up around 16% since the October low, whereas we go back to the S&P 500, it's a bit closer to 14-15%, so 14.5% there or so. So slightly better in the equal weight over this period, which shows that the market has broadened out a tad. As during the rest of the year, it's been more of the mega caps leading the charge. So with over almost 3/4 of stocks above their 200-day moving average in the S&P 500 at the moment, this is a fairly extended position. What we look for with the percentage of stocks above their 200-day moving average on the negative side is when it starts to come back through the 70% level again. So at the moment, you can see from previous periods when it gets above the 70% level, it's in a strong period. It doesn't necessarily mean it's going to immediately roll over. So, but once it does start to come back through there, then that's a potential negative signal. So at the moment, momentum is strong, and we've had a strong move over the last 2 months here now. Nasdaq 100 making new 52-week highs for the 3rd day in a row now. Again, blowing out of its 3 ATR channel. Not quite as extended as the S&P 500 above that level. You can see previous periods it has got above this, held above for a little bit before starting to consolidate, but wasn't the end of the rally attempt by any means. Earlier in the move, earlier in the year, it did pull back in before continuing on. So while it might be extended in the short term, it doesn't necessarily mean that this is going to be a major top. But from percentage wise, above their 200-day, 20-day moving average, again, we're at 91% of stocks in the Nasdaq 100 above their 20-day moving average. So quite extended in the short term. Similar measures again here. We draw these up. You can see where it reached the similar kind of level. So it did go sideways for a while after each of these previous periods. So certainly a little bit extended in the short term, and it's had an excellent run as with the S&P 500 since the low. So up over 17 to 18% since the low at the end of October there. If we look at the equal weighted chart, it is much more extended above its free ATR level, making new highs on the year now, new 52-week highs for this one. So broken above the free pivot levels from back during the corrective period from August to October there. So starting to push out to new highs, but as with the other indexes, seeing a little bit of extension in the short term after a very, very strong period over the last 2 months here. 77% above the 200-day moving average at the moment. You can see earlier in the year it got above the 70% level and held above it for multiple months before rolling back over again in August. So as I said on the previous, it doesn't necessarily mean it's gonna come back down, but once it starts to push back through that 70% level convincingly, then that's when it's a potential warning sign that the short-term rally attempt might be starting to face some problems. Nasdaq Composite also reached its free ATR level today. Again, earlier in November, it did push up above the free ATR level and run around it for a bit before consolidating for multiple weeks. So once again, a little bit short-term extended, but by no means blowing out completely in a parabolic way, but did break out to new highs in the last 2 days. So as with the other indexes there, we're back in stage 2 at the moment, making new 52-week highs on lots of these indexes. So we are in a bullish tone for the market, 69.48% above their 20-day moving average in the Nasdaq Composite. So I think Nasdaq Composite makes up around 3,000 or so stocks, so this is quite a big range. And the NYSE is the other one for this, whether to make up the bulk of the US market, which is at 82.81% of stocks above their 20-day moving average, the other 2,000 or so stocks. So this is also a similar point, breaking above the July pivot there, making new highs, but also blowing out above its free ATR level. So short-term extended again, but after a strong move of 13% since the swing low there. If we go back to the Nasdaq Composite, it's also had a similar move to the Nasdaq 100, around 17% or so. Russell 2000 once again hitting that free ATR level. So all of the major indexes seem to be reaching that point today above the various moving averages, 21-day, 200-day and the 50-day. So potentially with this one moving back towards stage 2 behavior, 91.67%. Looking on the weekly chart to determine that we've got a break above a pivot high through here. We haven't cleared the major overhead resistance, but back to that daily chart, you can see we've broken multiple pivot highs now above its 200-day moving average. So whether today was considered a stage 2 breakout, whether the earlier point was, it doesn't really matter as such. It's just that we're still in this overall resistance range, and it shows that we are advancing higher. So we'll look at the more speculative names. So we've got ETFs with ARK-K here, which has had an exceptionally strong move over the last 2 months since the low here on October the 30th. You can see it's up around 48% or so since the low. It did come off quite a long way compared to the market. So during the correction, the market only pulled back around 10%, but this came off over 30%, 33% there. So big correction, but it's recovered almost all of that now. You can see it's been running above the plus 1 ATR level here. So I've highlighted these, something I've been doing a little bit more recently when I want to highlight the change of behavior or change of character in the short-term trend using the ATR bands, is highlighting the 1 and the -1 ATR area with a shaded area. So once it gets back above that, you tend to get this sort of short-term trending behavior, and on the flip side, on the downside, you can see if it's in a short-term uptrend or short-term downtrend at a glance type thing. So at the moment, still in that short-term uptrend, pushing back towards the highs of the range. So we're back in stage 2 with ARK-K at the moment, which potentially 3 weeks ago now for that one. So breaking back but not yet clear of this overhead resistance from earlier in the year and the previous overhead resistance from back in 2022. Look at IPO. We've noticed a lot of the IPO stocks have been running strongly recently. There's been some bigger names, Arm, Carver, and a few others that have been doing really well. So again, short-term trend change with this one as we moved into the earlier part of November, and since then has been running above that +1 ATR level and touching the free ATR level as with the major indexes today. So again, short-term uptrend within potential stage 2 for the last 3 weeks now with this one, after pulling over. So it was in stage 2 earlier in the year before rolling over into stage 3, failed stage 4 breakdown, and it's now regained its stage 2 level again. If we look at the year-to-date performances of some of the major indexes, so we've got the Nasdaq, the NYSE, the S&P 500, the Nasdaq 100, Russell 2000, and then the S&P 500 equal weight and Nasdaq 100 equal weight as well. You can see with the Nasdaq 100 at the moment up at 51.4%, so reaching a point that in the last 20 years, if we flick through to the Nasdaq 100 returns here, you can see in the last 20 years at least this is a very high level. It's actually the second highest that it's been in the last 20 years. Only 2009 with 53.54% has beaten that. You've got the 1999 and 1988 with the dot-com bubble move where it went over 100% and 85% respectively, and then 1991 where it went 64.99%, where it was at similar levels, and also the 95 and 96 years at then in the 42 levels. So but within the last 20 years or so, we've only got to this level once before. Potentially we did in 2003, might have pulled back a little bit to actually close the end of the year at that point, but it's a very strong point at the moment. And so do we think it's going to get any better is I guess the question going into the final few weeks, or will it tail off a little bit or consolidate into year end? But surprising for many, after the bear market of last year, minus 32.97% in the Nasdaq 100, and if we look at the S&P 500, also off 18.11% last year. So currently S&P 500 only at 24.53% there. So within the last 20 years here, you can see it is at the upper end of its normal range here, where it's had with the stronger years, but not as exceptional as the Nasdaq 100 has been this year. And that's been due to the outperformance in the mega caps. So you can see from the equal weighted performance of the Nasdaq 100 here, which is this green, which at the moment is at 29.88%. So over, what we got there, 22% better in the Nasdaq 100 compared to its equal weight. So whereas the S&P 500 equal weight is down at 9.56% there, whereas the S&P 500 is at 22. So just over 12-13% better in the S&P 500. So again, the mega caps having that outperformance have helped the S&P 500 do better there. So majority of the indexes have had an exceptionally good year. Above 20% is a good year in a year. The average year for the market is around 7 or 8%, I believe. So this has been a very, very strong year and unexpected by many, but hopefully what we've been doing through the videos and the market breadth, etc., has helped keep you on the right side of it during the positive periods and keep you more defensive during the negative periods. So let's move on.